Let's unpack the vital role of the contribution margin in business strategies. At its core, the contribution margin tells us how much revenue from each sale is left after accounting for variable costs. This leftover revenue then contributes to fixed costs and profits. Think of it like if a product sells for $100 and its variable cost is $60, the contribution margin would be $40. This $40 is available to cover fixed costs and hopefully leave some profit. Now, to delve a bit deeper, there is a contribution margin ratio, CMR. It's the contribution margin divided by sales revenue. For our previous example, the CMR would be 40%, $40 over 100. This means that for every dollar of sales, 40 cents are left over to cover fixed costs and profit. The contribution margin is not just a number. It's a tool. Businesses use it to make vital decisions. For instance, if launching a new product or entering a new market segment, knowing the contribution margin can inform whether it's a viable move. A higher contribution margin indicates better profitability potential. And remember our chat about break-even point? Well, contribution margin plays a role in this too. By dividing the total fixed cost by the contribution margin per unit, businesses can then calculate how many units they need to sell to break even. This insight is critical for planning and forecasting. Contribution margin also offers a lens to gauge competition. If a competitor has a significantly higher contribution margin, they might have an advantage in pricing wars or promotional activities. Conversely, if your contribution margin is higher, it might be an opportunity to invest more in marketing or research and development to further push the advantage you're having. So let's illustrate with real-world examples. Think of tech giants of luxury brands with high margins. They can invest heavily in branding, research, or even acquisition strategies, all backed by a solid contribution margin. On the flip side, industries with slim margins like grocery stores operate on volume and efficiency. Every cent matters. The contribution margin is more than arithmetic. It's a mirror reflecting a company's financial health, strategic potential, and of course, competitive positioning within the market. So the next time you hear about business decisions, launches, or pricing changes, remember the hidden hero here, which is the contribution margin. Behind the scenes, it's shaping business landscapes one decision at a time. I hope you enjoyed this video, and if you did, click the like button or consider subscribing to the channel. There will be more educational videos coming soon, so it would be very nice to have you around. Until next time, peace out.